Hi, hello friends. Good evening, everyone. Welcome every one of you to Invest10, India's largest retail investors online conference. I'm Ashok Devanampriya, the CEO of Traders Gurukul and also the host for today's program. It's a great pleasure to have every one of you in the most influential stock investor conference of the year 2022. I am sure by the end of this session today, you will have a lot of knowledge to make better investment decisions. I would like to thank our media partner, Money Control Pro, the largest financial portal in India with millions of daily readership on their website, who helped us to reach a wider audience in a short period of time. I would also like to appreciate and thank our title sponsor, Sher Khan, one of the leading stockbrokers in India with millions of investors as their customers. They offer online security brokerage and portfolio management services to institutions, corporate houses, and individual investors. The speaker for today is Mr. Ravi Jain from Delhi. He's an independent investor with in-depth understanding of investing techniques and strategies. He specializes in identifying emerging trends and opportunities across various asset classes and sectors. He's a CFA charter holder and also an MBA in finance. He's also a successful investor over the last 15 years. His philosophy is to use behavioral finance and psychology aspects of the market along with top-down and bottom-up techniques of fundamental investing. He has considerable understanding of various asset classes, industries, and businesses. Picking small and mid caps at inflection point and identifying emerging trends is his special strength. You will hear a lot from him on this idea of inflection. My friend Ravi, it's a great pleasure to have you on board as a speaker. On behalf of Traders Gurukul, Money Control Pro, Sher Khan, I extend my warm welcome into this event as an elite speaker. Go ahead, Ravi. The stage is yours.
Thank you, Ashok. Good evening, everyone. So, as Ashok mentioned, myself, Ravi Jain. So, I'll be taking you all through the investment philosophy and techniques which I have been using over the last 15 years, right? I'm an individual investor and, have been part of various investing forum as well and write actively on the Twitter with the handle Ravi Jain 88. So, I'll proceed with the with my presentation, right? One second. Just give me a second. So first of all, disclaimer, the views expressed here are personal in nature and it is safe to assume that I may have investment in any or all of these stock ideas that I might refer in the presentation. And it is also possible that I may have exited or may exit from these position in the future without prior notification. This is not at all a stock recommendation. Kindly do your own due diligence or consult a registered advisor before making any investment decision. All the stocks mentioned here are in this presentation is strictly for the education purpose, right? So and I'm not a SEBI registered investment advisor. So these are the disclaimer which you need to take care of, right? In terms of the agenda, these are the broad topics which I'll be covering during my presentation. First, I'll talk about the investment style summary. Then I'll mention the top-down approach along with the few case studies. Then bottom-up approach of investing along with few case studies. Then a valuation primer and execution strategies. And finally, the key checklist, right? So first, let's talk about the investment style summary, which will give you a brief context of what I'll be speaking, so that the stage gets set for the presentation. So basically, I use a top-down and bottom-up approach of investing along with the behavioral, finance, and psychological aspect of the market. Within this, if you look at a top-down approach, I primarily look at three key things. The first one is economy cycle and earning cycle. Try to identify what stage of economy or earning cycle we are, so that there is some perspective on the macroeconomy scenario. Then the second part is the market evaluation. I try to look at which stage of the cycle we are in terms of the valuation, so that we can decide portfolio beta or approach or the nature of the portfolio building accordingly. And the third important part is to have a view on sectors and trend, so that we can identify sector tailwind and can position accordingly. So in summary, these are the key things I look at in the top down approach, which gives me a perspective of the market cycle and sectors. And then I use that further with the bottom up approach. Within the bottom up approach, I use various investment strategies or pattern recognition trends, which help me in identifying the various stocks, right? So I'll be covering all these things in details in the further slides, right? So third aspect is the behavioral finance. So one of the very most important aspect of the market is that one has to be rational and unbiased view. One has to look at the crowd behavior, right? And one has to look at the behavior in different aspects of the cycle, right? Because in the market, you have to control your emotion and greed. You have to remain unbiased. That is how one can make a big difference to the investment, right? So I combine all these things together and then come up with the investment strategy for myself, right? Which has worked perfectly over the last few years, right? Now let's get into details of each and everything. So first, let's look at the top-down approach along with the case studies. So within the top-down approach, I call it a typically BEAV analysis, which is basically behavioral aspect, earning cycle, economy cycle, and valuation cycle. Within the economy cycle, you have to understand, you have to identify what stage of economy cycle we are into. Are we into basically a weakening economy scenario, kind of economy we had from 2018 to 19, when a lot of negative news, negative things were happening and economy was not doing well? Or we into a contraction or throw kind of scenario when everything is going southward and things are looking very bleak? This kind of scenario we witnessed during the pandemic, when we had lockdown and everything. And then the other important, the third part is the expansion, which is the most important part for the market. So when we are in the expansion, market generally does really well. So this expansion trajectory started right after the pandemic, because a lot of central banks did a lot of Fed and a lot of monetary and fiscal stimulus, and that propelled the demand for everything. So we have been in expansionary phase from 2020. And then in fewer timeline, when economy generally sees a few years of expansion, then comes the peak also. So one has to be cautious at the peak, one has to be greedy at the contraction, and then expansion is the phase when things looks good, right? So first important aspect is to look at the economy cycle and identify where we are. Then the second thing is the earning cycle, which again depend on the economy cycle. So within the earning cycle, so there are 5 phases. One is the recovery phase, when we come out of the bad time and things start improving. Then we have a earning expansionary phase, when the corporate earnings grow in the double digit, which has been the case over the last 2 years. And then the third part is the positive surprise. So market generally loves the positive surprise. If market expect growth to be 10 to 12% for the entire market corporate earnings, and if the and the earnings comes higher than that, that is a positive surprise, and market does really well in that scenario, right? So that is the positive surprise. And in the negative surprise, when you expect some kind of growth but those numbers doesn't come in, so that is a negative surprise and negative for the market, right? So from the output perspective, generally expansionary phase coupled with earnings upcycle is a golden time for the equity market. So one has to look at these aspects to understand what kind of environment we are in. Then third important point is the valuation cycle. That is also very important point. There could be a scenario that earnings is good, everything is good, but valuations are expensive, and that point of time market will not do well, right? So within this valuation cycle, one has to see, is it a cyclical low, right, or is it a midpoint or cyclical high, right? So in terms of the number, generally if we talk about the Nifty and all, 10 to 12 price to earning ratio historically has been the cyclical low, and 25 to 30 P has been a cyclical high, and currently we are in a midpoint of around 20 to 22 kind of range, right? So that gives you an idea which stage we are in, right? So if we put together these 3 points, economy cycle, earning cycle, and valuation cycle, this gives us perspective that we are in expansionary phase and a midpoint of valuation, So that gives a comfort that market peak out is yet far away, right? So that gives a comfort from the valuation perspective, right? So that is the idea of doing a top down approach. Then the other aspect is the behavioral aspect. You have to understand how people are behaving at different point of time, right? So and for that you can look at the social media and various other forums to see how people are behaving. For example, back in 2020, when everything was looking bad, so people kind of had a view that that world is going to end, right, and things will not look good, and people sold at a distressed valuation and everything, right? So that time people panicked, and it's a contra in nature. When people panic, things start looking good, and people go euphoric, then things start going south. So from that point of view, it is very important to understand the aspect and be a contrarian, right? Then the other aspect is the sector tailwind. You have to understand the kind of environment we are living in. You have to understand what is likely to work in the future. So of late, what we have witnessed is that digital and basically tech has taken the taken the front seat, and those kind of stocks or sector are doing well. Export has picked up a lot because of China One Plus policy by various Western economies, right? So export is one theme which is doing well. The third part is we are living in an inflationary environment because of the stimulus given by various central banks. So in the inflationary environment, commodities does well, which we have been witnessing of late, and then some other tailwind as well. So that gives you a perspective that in which sector you have to be in, right? So that you get the benefit out of the theme which is there in the market, right? So that is the top-down approach, to which gives you a context of what stage of cycle you are in, so that you can position yourself accordingly. If you are in at the beginning of a cycle, you can position your portfolio aggressively, maybe in the small cap or maybe in the high beta kind of stock. But if you are in a mid cycle, then you need to be a bit balanced approach. And if you believe that you are at a high point of the market or at a peak, then you need to start having a conservative approach. So that is how one needs to look at the top down approach of investing, right? So I'll give you a context of basically this context I'll try to explain through some example. So back in 2018, right? So we had a Modi government coming in 2014, and from 2014 to 18, we had a spectacular run in the market, right? And that market was on the hope that earnings will get revived. So we had a golden period of earnings from 2001 to 8, where earnings of the corporate went up at a CAGR of 21%, right? And market was hoping that when the Modi government came back, right, that earnings will pick up, but that never happened. From 2009 to 17, we remained in the range where earnings were just at a 5% CAGR, but market kept on factoring the good things, and then earnings recovery were not happening then. And then what happened? Earnings recovery were not happening, and the large cap valuation, Nifty price to earning ratio, went up to 24-25 times, which was historical high and 25% higher than the average, right? So these two indicators were saying that earnings recovery are not happening, valuation is at high. Then the third indicator for the small cap. So small cap premium versus large cap were almost at an all-time high. So we made a high of 115% in 2010, and then we were at 125%, right? In terms of the market behavior, right? So people were of the view that we had a fantastic value of 5 years, 2013 to 18. In 2018, people still had the view that this is just the beginning of the cycle. People were highly enthusiastic, right? And they were in denial phase that this time is different and we are not going to fall. So all these things were indicating that market is about to peak out, right? And that is the time we turned bearish on the Indian equities, especially in the small cap space back in mid 2018, right? And took very conservative approach and went aggressively with the cash. So some other behavior aspect I like to mention is at that point of time, what was happening is dozens of junk stocks were being positioned as a turnaround story. Most of them doubled in a month with no fundamental story. A lot of people who used to get tips, right? They turned tip provider. market was flooded with a lot of liquidity, and market participants were of the view that it's the beginning of a new era, right? And we did some lot of surveys which indicated that there's a euphoria in the market, right? So there were all the ingredients for the for us to believe that market is at a peak. And then at that point of time, budget had to come, and basically it had to be populist because the next set of election had to happen after that. So that is the reason we went into cash, and that is how exactly the things panned out. Market fell a lot. Small cap index went down from 20,000 to 13,000 within a span of 6 months. So people lost 30 to 40% kind of money, right? So this example was just to give some perspective that how to use these things to get some indication of what stage of the market we are in. Now let's look at the other aspect of it, of the 2020. So 2020 we had a black swan scenario because of the pandemic. Index fell 40-50%.